Is all crypto income taxable? And how's that classified? There's a lot of activity with crypto trading that is not taxable. Anytime you experience a gain from selling or exchanging an asset, that's taxable. That's called a capital gain. By exchange, I mean swapping one coin for another coin. On the first coin, you experience some sort of gain, and we express that in terms of US dollars. If you get paid in cryptocurrency, that income is taxable. If you get an airdrop, if you get staking rewards, mining rewards, all these are forms of income and are taxed. But what things are not taxed? Transfers are not taxed. So if I transfer coins to a private wallet or back, that is not taxable because you still retain ownership of it. Another thing that's not taxed is lending. Now, if I have some cryptocurrencies and I go to a lending provider and then I borrow something, stable coin or I get dollars, however it's paid out, based on them securing my assets as collateral, then that payment to me is not taxable because I have to pay it back. It's really not an increase of wealth to me. Now, to play that out, if the value of my underlying guaranteed currencies goes down so far that the lender seizes the collateral to pay for the debt, then that would be considered a liquidation and that would be a taxable liquidation to you. So you really want that to happen. Then another thing that's not taxed is activity that you would do where you're putting your coins up for collateral. So the staking activity, the coins that you put up to stake and then you get them back, that's not taxed either. It's only the distribution, the staking rewards that are subject to taxable income. So hope that helps. Not everything is taxable. Always moving to your private wallet, which is always a good thing, is not taxable. On your tax return, do you have to report every single crypto transaction? A lot of people have just reported the bottom line amount. Now, to be sure, when you report the bottom line amount, the key is that you're paying taxes on that amount and you're paying the fair amount of taxes. And ultimately, that's all IRS is generally interested in, make sure they get the right amount of taxes. But it can also set you up for a harsh audit. Let me tell you why. When the IRS decides who they're going to audit, they look at something called total positive income. Total positive income is the income without expenses. So it would be your wages. If it's a company you have or a business you have, it's the income without the expenses. For investing, it's the proceeds of what you've sold, but not the cost of what you sold. So you will get a very big number. So they add up all these positive numbers and then they compare it on your tax return, and then they compare it to the 1099s and W-2s because those documents report what we'd call the total positive numbers. Let me tell you why it's so important to report your cryptocurrency correctly on your tax return. Some people just write the bottom line amount of how much their gains were. And that's good in that you pay the right amount of taxes, but it sets you up for being audited. And an audit is a very painful experience. I have a client who actively traded his cryptocurrencies, very, very actively. And in 2017, which was the year that was being audited, he reported 150 million in proceeds, but his profit was much smaller. I think, more like 600,000 in profit. But he should have reported 150 million in proceeds. But he didn't report that on his tax return. He just reported the $600,000 as the net proceeds, no cost, total profit, and he reported it. So he paid the right amount of tax, but he didn't report as much total positive income as they were expecting. They were expecting 150 million, so he got set up for an audit. 5 years of agony because his tax preparer took a shortcut in how they wrote this in. So be very, very careful about taking shortcuts when it comes to your tax form because it could be setting you up for an audit. The best way to protect yourself on that is to get our product called TaxShield. TaxShield allows us to pull your IRS information on a weekly basis. We can see when you've been flagged for an audit. We can also detect underreporting of income, like this very scenario that this client went through. If he had been a TaxShield member before this audit had started, we would have told him that you've underreported your income. We would have, at no additional charge, worked with him to understand what the problem was and then told him how it could be remedied and would have done it for him. So I highly recommend if you're a crypto trader, that you get our TaxShield product. It's going to save your bacon. You won't have to go through 5 years of trial and agony and fear that the IRS is going to put you through.